Okay, back with exercise 12-7. On December 31st, 2020, the equities section of Zoom Inc.'s balance sheet appears below. All the shares were issued on January 1st, 2018. That's when they began operations. No dividends have been declared during the first 2 years of operation, so no dividends in 2018 and no dividends in 2019. During 2020, the cash dividends declared and paid were $613,300. So, just fixing my headset almost fell off. All right. Calculate the amount of cash dividends paid during 2020 to each of the three classes of shares. So we have the total amount. So the first would get paid would be preferred shares, $375 for each share, and there's 40,000 shares. Now, because they're cumulative, that means they would have to pay 2018, the 2019, and the 2020 amount before anyone else gets anything. So $375 per share times the 40,000 shares that are outstanding is $150,000 for each of those 3 years, 2018, 2019, and 2020. So that would be $450,000. Next, the preferred shares, non-cumulative ones, would get paid, and that's $10 per share for 8,000 shares. So that's $80,000. Whatever's left over goes to the common shares. So we just take the total, $613,300, less the amounts that were paid out already. That leaves $83,300. That's what's left over to go to the common shareholders. Part 2. Assuming profit earned during 2020 was $1,250,000, determine the December 31st, 2019 balance and retained earnings. So we have the balance at the end of 2020. We know what profit was earned during 2020. We know what dividends were paid out during 2020. So we have to work backwards to find out what the 2019 balance and retained earning was. So how we would normally calculate it, the 2019 balance and retained earnings, we would add the 2020 profit, we would subtract the 2020 dividends, and we would come up with the balance in 2020. We know this balance, so we have to now do math to work backwards to figure out what this balance is. And it's $104,900. So you just have to do the math with this formula here, or you can look at it in a T account like this. So we know the balance is $741,600. We know that the profit during the year was $1,250,000. We know the dividends paid out were $613,300. So again, you just need to do the math to figure out what the value of X is. Prepare a statement of changes in equity for the year ended December 31st, 2020. So when you're asked to do these things, make sure you don't forget about this portion on top. Make sure you put in your headings. So we have the balances here as of January 1st. Preferred shares, the cumulative ones, the non-cumulative ones, the common shares. Retained earnings, we calculated here in part 2 what the balance was as of 2019. Then we have our total equity, which is just the sum of all of these. Let me scroll this up higher. There were no shares issued. We know the profit during 2020 was $1,250,000. That goes added to retained earnings. And we know the dividend that was paid was $613,300, and that gets subtracted from retained earnings. We calculate our new balances and get our new total equity, which equals what we have here on the equity section of the balance sheet. Now, because this line has no amounts, you could leave it out if you wanted. They're showing it here just to make sure that everyone's aware that it is zero.